wishes all the people that you work with very Merry Christmas. Hope you have a great holiday. We'll have a half a day tomorrow in the markets. I'll be off, Christmas Day off. Should be back with you here with Mike on Thursday. Not much has changed since Friday, except we had that face-ripping rally in the S&Ps. I actually covered before the reversal. I'll go over some of the equities and what I've done. But I want to start with the title of the video is that the euro can make an attempt for another bear market rally, maybe back towards 105 and a half, maybe 106. But I'm not considering this to be a low, even if that should occur. So I'm lightly long from 90, risking the lows just for a trade. I'm trading very low, very light, low leverage. Um, and because a lot of crazy things can happen during the holidays, they're very illiquid for the next 2 weeks, actually, until we get through New Year's and we start in full swing in early January. So, in fact, this formation, you may laugh at me, but a friend of mine, I don't know, 40 years ago, when we were doing our charts by hand, he used to call this a doggy bottom. Okay, so here's the dog's back legs, the front legs, and here's the dog's snout, and it's a higher low. So right now, maybe it's only a schnauzer, and we hope that the nose doesn't get too long, and then we get through the top of the head at 104 and a half. A simple measured move would be 106. So, but since I still believe we're going to 102, I'm not going to, you know, be hanging around a long time if that happens. Pound is weaker, but it too could have some type of bounce, although I'm looking for lower numbers next year. Aussie still, the weakness. It's almost like a sideways flag. We could get a rally in Aussie too. Anyway, it's basically because of the dollar, which I said, you liquidate your long dollar positions on the second drive, which is on the daily. It's number two. And, we're going to follow this all the way through because I'm forecasting this is going to turn into a three drive. So what I need for a three dot drive first is for the dollar to come off. I don't know if it's going to come off this much to 106 before we get one more rally attempt, or it's going to hold at 650. 107 is going to be a pretty big area to get down to. We'll see what it does there. But what I'm looking for, this is drive one, where, we were diverging, but it was over 80. Here's drive two. Like I said on Friday, it was a little over 80. So thinking there's going to be a pullback, therefore that's a little scalp on the upside in euro. Here's how we could get to 106 in the euro. Um, Talking about the yen, I said it's going to have to do some work. And it's really not, didn't take its time to retest the highs. So maybe we get the same type of scenario in here, like the dollar, where you get A, B, C, we get a pullback, and then the final push up in the end. Looking at the metals, gold's trying to hold for some type of rally. The shares really didn't close that great. See how they're opening with gold down 480. They didn't close that great last week. So here's GDX. I thought that these might fall prey to, tax loss selling. Still looks like there's some of that going on. But keep an eye on BTG. It's starting to show a little more relative strength. There's nothing that I see in the miners that makes me want to commit to them yet. All right, so let's get to what's happening in yields. So probably the same thing that we're talking about in yen. It's already putting in a little reversal candle. So maybe we get a pullback back towards 435, get some interest rate relief, and that's probably what the market's going to need to be able to generate a new high. It's a tough call. I mean, we did break down. We haven't negated the breakout, but this turn here on Friday, and the character of the market has me in an I don't know mode. Um, I think I am still looking for a major high, but I know there were a lot of guys talking about 6,200. Well, now I'm 6,400. Now I can come up with a reason why, just based upon a range. If this is a range of 60, 90, and call it 5,800. So let's call it 61 and 58. And if we break out over 61, you tack on this break on top of it. That's how you get 64, which 64 would be the top of the wedge line that it never got to. So here's the weekly. So, if I go to this line here, that's only 62. So that would be some kind of throwover. Anyway, that, I could see the market making a rally to new highs, or I could see a continuation of this correction. So when in doubt, out. That's what I'm doing. I did after Friday's action. A lot of things came back, but a lot of things didn't come back. So let's go to the Mag 7 and you'll see what I mean. For example, I covered my NVIDIA shorts. Thank God. Did it down here about 130 and made money on it. It was because we had a little three drive here. And this was actually the low Monday, and it had this big rally, took out the neckline, the breakdown, but never closed under the breakdown. But when after we were down 180 handles, we had a lower opening on the government shutdown. And look at what NVIDIA did. It just took out the prior low by a little bit. Here you go. Count them. One, two, three. They work all over the place. Okay. So I recognized it and I started to see the market turn. And I said, well, if NVIDIA can't break down hard after this was a major breakdown and the market's going to turn here, I'm gone. So NVIDIA still acting okay. I don't know where to recommit to that, but something that did catch my eye was on Friday when the rest of the market recovered. NVIDIA didn't. All right, here's the daily on it. Not NVIDIA, I mean Meta. Meta did not. So perhaps Zuckerberg, who brought for the inaugural little donation of $1 million to Mar-a-Lago, um, I don't think he's in the club. And I don't know if Elon likes him either. So, to me, this was kind of telling how it didn't come back. Microsoft did the same thing. Microsoft really didn't come back much on Friday. Okay, so and Microsoft never took out the July high. So let's see what the S&Ps do. These are a couple of candidates that I'm interested in now in the Mag 7. I mean, you look at Meta, and it was pretty classic. I mean, at the highs, we were diverging on daily and 4 hour, and it actually, for a little while, um, you had a little false breakdown. So Meta's definitely a candidate for shorts down the road. So I think that's about all I'm going to cover on today. Nothing that new. See, Bitcoin still looks kind of heavy to me. All right, we'll see if it could regroup or not. That could be a bad sign for the market. Bitcoin also diverged pretty good up here at the highs. I don't think I want to be long under 92. Okay, because we could take it down to 80, 70. Anyway, a reason for caution. Not saying that we can't blast one more time, but anything can happen during these holiday sessions. So this is getting close to wrapping another year here on TradeGATEHub, and many, many videos with a lot of teaching material and uh, some good calls, some bad calls, the good, the bad, the ugly. Hit rate has been better than 50% on anything you've heard from me. So I hope that you're taking advantage of it and that we here at TradeGATEHub have helped you have a decent year or saved you from having a real rough year to have to come back from. And we won't be here tomorrow. So, you know what I have to say to you, our listeners, our viewers, people that pay attention to us and retweet our stuff. All the guys I work with and ladies that help us provide this for free to you, including the president of TradeView, Tim Fury. This is a free service for people. Normally, you would have to, you know, get a subscription. So all I could say now, wrapping up this broadcast, is this. It's gonna be a blue Christmas without you. I'll be so blue just thinking about you. You'll be doing all right with your Christmas of white, and I'll have a blue Christmas. Merry Christmas, warriors. Don't just count your pips, count your blessings.